Doug Flynn with us, certified financial planner, co-founder, Flynn Zito Capital Management. Don't you start with me on this hypocrisy over the border deal. It's just, can't even.
I'll remain neutral.
Yeah, you always do, by the way. It's just just silliness. So, like, that's what I should say to you. If I was going to give you 80% of what you wanted, you'd probably take the deal, being a financial guy, by the way. BP,
sounds like politics.
It does sound a little like politics. So BP comes out with a profit that is, let's see, second highest profit in a decade. We used to talk a lot about this company way back. And what's going on here? Did we make anything or read anything into this?
Well, the highest one was after Russia invaded Ukraine and gas prices spiked, oil prices spiked to $130-ish. So this is the highest, really, if you discount that. And, of course, they're going to come out and say we're going to do some share buybacks and we're going to maybe increase the dividend. Their oil companies are making a good amount of money. There's no question. They're going to try to return some of that to shareholders. They'll make even more if gas prices go up. But this stock, if you're looking at it as an investor, it's fully valued. I mean, there's a high dividend on it, but there's really no growth aspects to it because oil would have to go up and stay up for a lot longer for it to really be worthwhile investing in at this point, in our opinion. Yeah.
I like the story that came out of, or just think it's interesting, college basketball players that play at Dartmouth. So here's the headline. Dartmouth basketball players are school employees, and they can form a first-of-its-kind union. That's interesting, I suppose. I mean, all this NIL stuff we've talked about for years, and now the union side of it, unionization of athletes. What do you say?
Yeah, it's interesting. It only takes 8 of the 15 players because you need a simple majority, and they can unionize. Look, they're going to fight it. Dartmouth's going to fight it. The NCAA is probably going to fight it, and it could very well go all the way to the Supreme Court because there's a lot of ramifications from here. Look, Ivy League basketball programs they're not revenue. They don't make any money. Right. So, I worry about the downstream effects of if you do this, do a lot more schools just get rid of their sports programs because they're already not making money, and it's a lost leader in a lot of ways. And so I don't really know how it's all going to play out if this comes to pass and if it goes across all of the colleges with all of the teams. But it's a start, and I get it. They're working. The real thing I see in here is that per NCAA rules, you're only supposed to work about 20 hours a week or practice about 20 hours a week and play. These people are doing 40 to 50 hours a week, so I think therein lies some of the problem.
I'm taking Ivy League classes on top of it, so they, all right, anyway, Dartmouth, unionization. Final thing, it's Tuesday, so that means it's Tax Tip Tuesday with Doug Flynn. So today we are maximizing your refund. We can put up some of this on the screen as Doug takes us through it. How do we do it? How do we maximize our refunds?
Right. So the average refund was about $3,100 last year, and that was actually down from the year before. Now, you may very well get a little bit of a higher refund this year because the tax brackets went up by about 7%, meaning if you made less than 7% more than the year before, you likely are going to get a little bit more money back than you did before. But the real question is, if you're getting these refunds, is that a smart thing to do? Because think of it like this. The money that you just withheld from your paycheck in January, you're not going to get that back until next April. So you're giving that money to the government without any interest for like 15 months. And so the simplest thing you need to do is you can go onto the irs.gov website and go grab this form. It's a W-4 form. This is the same form that you filled out on the first day that you took your job, whatever the last job is that you took. And for many people, that might have been a long time ago. And maybe you have a different status right now. Maybe you're married and you were single when you started, but your withholding is off. And the real issue is if you're getting a $3,100 refund every single year, if you took that money and got it in your paycheck, and in step 4, you can just change your withholding to have them take out less to send to the government, you could invest that money. If you invested that money for 20 years, you'd have about $150,000. And so that's one way to do it. If you end up getting a refund every year. It actually also works in the reverse. There are a lot of people who owe, and they unexpectedly have to borrow money to do that. And so that same W-4 form can work the other way. For example, if you owe $1,500 every year, you can just fill in, take out that $1,500 throughout the year, and they'll just simply withhold an extra $30 a week. And now you won't owe anything. So if you're getting these wild fluctuating things, of course, if you're getting big refunds, don't give that money to the government with no interest. Get it in your hands each week, invest it, do something more productive. even in a money market at 5%, it's more than giving it to the government at 0.
Very interesting news you could use. Again, we love Tax Tip Tuesday for that reason. See how easy appearing on the show is, Doug, if you don't just make openly hypocritical statements that you know are not true, and, you know, you could speak and we don't interrupt you or anything. Thank you, Doug.
Thank you.
All right, Doug Flynn.